All right, if you've been out there house hunting lately, then you already know. The good houses, they're going fast, like multiple offer, gone in a week fast. And with inventory rising and prices continuing to climb, now's the time to really start paying attention. This is your full March 2025 Edmonton market breakdown. Whether you're buying, selling, or just trying to make sense of what's going on out there, I'll break down what's actually moving, where prices are headed, and why having a smart plan is more important now than ever. Hey, what's going on, everybody? It's Tristan here, and if you're watching this, there's a good chance that you're either actively in the market or seriously thinking about it. And let's be honest, it's a bit chaotic out there right now. The headlines might be throwing numbers at you, but what actually matters is what we are seeing on the ground right here in Edmonton. This video is your full March 2025 market update, but more importantly, it's going to help you make sense of it all. I'm talking median prices, days on market, how fast homes are actually moving, and where we're seeing this pressure build. And whether you're buying, selling, or just keeping tabs on your equity, I'm here to help you navigate the market with clarity and confidence. Because in this kind of environment, it's not about guessing, it's about knowing how to move forward with a plan that works. All right, let's talk about what's actually happening across the Greater Edmonton area, because there's a clear shift in momentum. And if you've even loosely been following the market, you've probably felt it. In March, we saw 2,494 residential sales, which is a massive 36.9% jump from February. That's not just a small seasonal bump. That's a signal that buyer confidence is back in full swing. Year over year, sales are also up about 1.3%, which shows that the market is heating up faster than many people probably expected. What's interesting is the new listings. We had 3,780 new listings hit the market, which is up 44.5% month over month, and a 7.5% increase from last year. So on the surface, it feels like there's a lot more selection, but here's the catch. Overall inventory is still down 8.1% year over year. And that's the pressure point that's fueling all of this competition. So what does this mean if you're navigating the GEA market right now? It means that even though there's more to choose from, buyers are out in full force, and the best homes are getting scooped up quickly, often in multiple offer scenarios. It's not about panic, but it is about being ready. Because when a listing checks all the right boxes, that probably means that it checks those boxes for other people as well. And those who are more prepared are bound to win. When we zoom in on detached homes across the Greater Edmonton area, it's clear this segment is leading the charge. In March, we saw 1,434 detached sales, which is a 41.3% jump from February. A serious spike in activity as we head into this spring market. Year over year, sales are down just slightly by about 1.8%, but make no mistake, the demand is still there and it's strong. Median price for detached homes hit $535,000, which is up about 0.9% month over month and 12.6% higher than March of last year. That is steady upward momentum, and sellers are clearly benefiting from the competition. Now, the days on market sat at 30 days on average, while median days was at just 15, which is up slightly from February, but that doesn't mean that homes are sitting. What we're actually seeing is more deals falling apart due to the condition period. Buyers are coming in aggressive with short timelines to stay competitive, but then struggling to meet financing or waive conditions in time. Sometimes they've even added in a home sale clause, or the conditions just aren't firming up fast enough. When those deals collapse, the home gets back on the market, extending the clock, even when demand is real. In terms of inventory, we had 2,182 detached listings in March, which is up about 5.1% from February. So yes, selection has improved slightly, but it's still tight overall. That Supply-demand imbalance is what's keeping prices elevated and creating that urgency. If you're selling a well-prepped, well-priced home right now, you're in a great spot. And if you're buying, you've got to be ready, not just to offer, but to close with confidence. So to wrap up the detached segment, you can see that demand is strong, prices are rising, and even though inventory's up slightly, it's not enough to cool things down. If you're selling, you're in a great position, but your pricing and your prep need to be sharp. And if you're buying, having that game plan to move quickly and follow through confidently is what's going to give you the edge in this market. Now, what's interesting is how that same intensity in the detached space is starting to push more buyers towards semi-detached homes. And it makes sense. Similar square footage, lower price point, and in many cases, just as much long-term potential. Let's break down what we're seeing there. Let's talk numbers. Semi-detached homes across the Greater Edmonton Area came in with a median price of $425,150 in March. That's relatively flat compared to February, but still up 6.2% year over year, which shows stable growth and consistent buyer demand. This segment continues to offer great value for those who want more space and privacy than a townhouse without jumping into detached price territory. We saw 268 sales last month, which is up 24.7% from February and 3.1% more than the same time last year. So even without massive price swings, the interest is definitely there. And these homes are moving quickly. Average days on market was just 22 days, while the median days on market sat at just 15, which is the fastest movement across all major categories. But just like in the detached segment, that stat is a bit nuanced. Some buyers are still putting in aggressive offers with tight conditions to stay competitive, but then struggling to waive those conditions on time. When that happens, listings come back to market, stretching out the total time on paper, even if demand is still solid. As for inventory, we had 395 new semi-detached listings in March, which is up from 349 in February, a 13.2% increase to be exact. So yes, there's more choice, but the best listings, those with the upgrades, the great layouts, or the prime location, are still going fast. For sellers, that means the market's working in your favor, and buyers, timing and preparation are still everything. So here's the takeaway on semi-detached homes. They're holding strong as a value-packed option. Prices are steady, demand is climbing, and the quick turnaround times are proof that buyers are acting fast when the right home hits the market. But just like with the detached homes, the challenge isn't finding interest, it's getting deals to the finish line. And that's why buyers who are the most prepared are the ones walking away with the keys. By the way, if you're finding this helpful, feel free to hit that like button or subscribe so you don't miss next month's market update. I drop these every month to help you stay ahead of the market without the guesswork. And if you've got a question about your own situation, drop it in the comments or shoot me a message. I'll always get back to you. Now, as affordability tightens and competition ramps up, a lot of buyers, especially first-timers and those looking for a more accessible path to ownership, are turning to the row and townhome segment. And the numbers are there. And what do the numbers look like in this segment? They're telling a pretty compelling story as well. So let's dive right into it. This segment is gaining some serious traction right now. In March, the median selling price hit $322,500. Which is up 5.7% month over month and a strong 11.2% jump year over year. That's some of the highest appreciation we're seeing across all categories, and it's no surprise. Buyers are looking for space, affordability, and lifestyle flexibility, and townhomes are delivering. We had 371 sales in March, which is up 27.9% from February and 3.9% higher than last year. So demand is clearly on the rise, and with an average days on market of just 25 days, while the median was just 16 days, it's obvious that buyers are acting quickly, especially when a listing is well located and move-in ready. But just like the other segments, the back end of the deal is where things are getting a bit more complicated. Some offers are falling apart during the condition phase, not just because of a lack of interest, but because buyers are pushing themselves to stay competitive and then struggling to meet tight timelines. On the supply side, 482 new townhome listings hit the market in March, which is up from 434 in February, being an 11.1% increase. So inventory is growing, but not enough to shift things into a buyer-friendly sort of territory. The homes that are priced right and staged well, they're still going quickly, and in many cases with multiple interested parties. If you're in the market for a townhome right now, just know you've got options, but the window to act is still pretty narrow. So overall, townhomes are quickly becoming one of the most competitive segments in the market, and it's because they offer that perfect middle ground. More space than a condo, less maintenance than a detached, and pricing that's still within reach for a lot of buyers. With prices rising and inventory still playing catch up, this is a segment where decisiveness pays off in a big way. Now let's shift gears and take a look at apartment style condominiums, a category that's been quietly heating up. Whether you're a first-time buyer looking for an affordable entry point or an investor watching rental trends, this segment is starting to show some real momentum. In March, the median sale price held steady at $197,000, which is virtually flat month over month, but it's still up 6.1% year over year. And for buyers focused on affordability, this remains the most accessible entry point into the market. We saw 418 apartment sales in March, which is up nearly 38% from February and 8.8% higher than last year. That kind of jump tells us that more buyers, especially first timers and downsizers, are stepping into this space. But while the price point is attractive, the pace is still a bit slower here, with an average days on market of 42 days. That's the longest of any property type across the Greater Edmonton Area market. And it reflects a mix of two things: more caution from buyers and more variability in product quality across the board. Also worth noting is the rental potential in this segment. The average one-bedroom unit is now renting for $1,285 and a two-bedroom for just shy of $1,600. With prices still relatively low and demand for rentals staying high, apartment-style condominiums are beginning to make sense again from an investor's perspective, especially in buildings with strong financials and good locations. So if you're looking at this segment purely as a stepping stone or a cash flow opportunity, there's some room here to make it work. All right, so here's the bottom line. This market is moving, and whether you're buying, selling, or investing, success comes down to preparation. Buyers, get clear on your numbers and be ready to move fast. Conditions are still important, but they need to be realistic. Sellers, the advantage is yours, but pricing and presentation still matter. The best homes are still flying. Investors, condos are starting to cash flow again. If you're thinking about rental income, now's the time to look closely. Whatever your goal is this spring, make sure that you've got a plan, and if you need one, I'm here to help. Thank you so much for watching. Whether you're just starting to explore your options or you're already deep in the process, I hope this gave you some clarity on what's actually happening out there in Edmonton. If you have any questions about your own situation, feel free to reach out. I'm always happy to chat, no pressure at all. And if you found this video helpful, make sure you hit that subscribe button. I post these updates every month along with tips, market insights, and everything you need to stay ahead of the curve. See you in the next one.